Yo, what's going on, guys? It's Standout Trading. In this video, I'm going to be updating my Elliott wave analysis on Bitcoin. Bitcoin is down about 14% today, and the big question is, when is this thing going to recover? Is this thing just going to keep crashing the downside? And I'm going to do my best to answer those questions in this video. So first of all, what we previously talked about over the course of the last few months is that Bitcoin was in this diagonal pattern for wave C of 4 on the Bitcoin price chart. So we were expecting a $30,000 to $26,000 Bitcoin for this wave 3, and then after it hit those targets, we were expecting a lot of consolidation, likely a multi-week correction for wave 4. The exception was that it needed to overlap into the price territory of wave 1. If it did not, then it couldn't be a valid ending diagonal pattern. After that wave 4 was complete, we were expecting another leg to the downside towards around $22,000 to $24,000. In the worst case, $17.5 to around $20,000. And the target for wave 4 to the upside was around $33,000 to $37,000. So now if we take a look at the Bitcoin price chart, you can see that it did hit my lower target of $26,000 at the 0.618 Fibonacci retracement level. And what we were anticipating for after that was a retracement up to around $33,000 to $37,000. If we see how high this thing got, it got around 32.4K, and this was a multi-week correction to the upside. The thing that it didn't follow, though, was that it did not overlap into the price territory of wave 1. This is a pretty bad sign for Bitcoin, because the fact that it did not do that, it means that this could not be a wave 4, and it could not be going down for wave 5 right now. The next thing that we would have to look at is that wave 3 is still heading to the downside. So if we bring up some more Fibonacci extension levels, if we bring up the 0.786, this is the next thing that we would have to look at when looking at this type of count. So we'd have to put the wave 3 right here, and then still going up for wave 4. Here's the problem. Wave 4 needs to overlap into that price territory of wave 1, and since it is already at $22,000 right now at my lower target and has not even retraced up for this wave 4, lowers my confidence of this count occurring. Here's the reason: because let's say it reverses right where it's at right now, which is pretty unlikely for this thing to just come to a pivot right here with all this bearish strength to the downside. It would need to have such a sharp reversal to the upside to overlap into the price territory of wave 1, and this would have to occur over like a 2-week period, and then we just have to get a drastic move to the downside for wave 5. So I just don't think that it's likely to think that we could just get this insanely sharp move to the upside followed by an insanely sharp move back to the downside. Like I've been telling you guys over the course of the last week or two now, I said if Bitcoin is going to retrace up to around $33,000 to $37,000, the level that it needs to hold is around 26.9K. If 26.9K breaks and there's a daily close below that level, we're looking for this thing just to completely flush to the downside and not play out this diagonal count. So in my opinion now, the likeliness of Bitcoin being in this wave 4 is significantly lowered due to the fact that it did break through 26.9K. And we can see that if we do take some of these levels off and we draw the Fibonacci retracement from swing low to swing high, you can see that that daily candle did close below that 26.9K area at that 0.786, and you can see what's happened now. It's down about 14.5% on the day so far. So it's doing exactly what the bear scenario was saying. Now, if you guys are wondering, well, how'd you know that if it breaks the 0.786, it would take out the previous low? Well, typically, when something is just going to retrace to the downside before pulling back to the upside, it will stay above all of these fib levels. If it starts to break through that 0.786 and you get a candle close below that level, the likeliness of this thing reversing back to the upside is significantly lowered. What usually does occur is it will take out this previous low down here. So that is definitely something you guys want to consider when looking at your own charts. Now, what we've been talking about is that if Bitcoin is going to play out this diagonal count, these trend lines must converge. So within an ending contracting diagonal, there must be converging trend lines from waves 1 to 3 and 2 to 4. It cannot just be like a parallel channel like this, because that's not what a diagonal structure is. If it is a contracting diagonal, the trend lines must be converging. So the fact that it would need such a drastic move up and a drastic move back to the downside, my confidence in this count is significantly lowered, and I have some new bearish counts that I want to show you guys. Now, they do not really call for too much lower before we do get this retracement up. You guys will find out in a little bit. But first of all, I did post this on my Twitter on June 11th, going over again, if 26.9K is going to hold as support, then it could still go higher towards my higher targets of $33,000 to $37,000. If that level starts to break, the setup in the picture below looks more likely. So we had this fractal over here. It played this out, this three-way move back to the upside, and this kind of fractal showed that we would see more downside and it would take out these previous lows down here. So now if we take a look at the Bitcoin price chart, you can see that it's around 22.7K right now, and this fractal did warn us for this dump, especially when the price did break through 26.9K. So in my opinion, the account that I'm about to go over with you guys seems the most likely to me now that it proves to me that the likeliness of Bitcoin still being in this wave 4 is significantly lowered. So this fractal does show for a bottom coming in anywhere from $20,000 to $21,000 before we do get this retracement. But really what I'm looking at from the highs, if I do put this on the weekly time frame to give you guys kind of a bigger picture of the count that I'm looking at. I already did go over this on my Twitter, but basically right now we have minor wave W to the downside. This was complete as a double zigzag structure at the minute degree, and then there was a double zigzag up which followed a nice little trend channel for minor wave X. Now it is in minor wave Y. So now if we drop back to the lower time frames, this is a double zigzag structure. This is when there is a three-way move to the downside within waves W and Y. It is either going to be a simple, double, or triple zigzag. Within wave X, it can be any correction style. So there was a double zigzag in wave X. Now there is a simple zigzag in wave Y. That is why you guys are seeing this drastic move to the downside right now, because it is in wave C of Y. So this is kind of a bad sign for the bulls right now, but I do think that this thing is going to make a massive recovery that no one will be expecting. So basically you have minute wave A complete, minute wave B complete, which was a fairly shallow correction. It went to the middle of the 0.236 and 0.382, and now it is falling down to my lower fib targets. Now the first target for Bitcoin would be this lower trend line, so it does have the potential to bottom right here, but due to the bearish strength to the downside, it is likely that we do continue a little bit lower until bulls show that they are stepping in. Now the targets are anywhere from around 16.9K to around 21.7K. I think that this could bottom out minor wave Y and intermediate wave W. After that, what we would get is a bigger three-way move to the upside. The most common target is the 0.5 level. Now I'm not really going to state any targets yet because we need to see what level this bottoms at, and then we can get more accurate retracement targets. For now, I'm just saying that once we do kind of get in this area around 16.9K to around 21.7K, we should see a massive bounce to the upside in this three-way move for wave X. Once this thing does bottom out, or if it does bottom out and we do start to get those signals down here, then I will release a target video going over what the targets would be for the retracement. Ignore these numbers on the side right here because they will be adjusted depending on which level Bitcoin does bottom at. Now, once this wave X is complete, that would not be the bottom of Bitcoin. So here's the macro count that I'm looking at right now, which I did previously show you guys, but if you guys did not watch my recent video on Bitcoin, then here it is. We have 5 waves up for cycle wave 1. We have cycle wave 2, which was very short in time compared to cycle wave 1, but sometimes you will get something called balance through alternation, where you do get a deep and very short in time cycle wave 2, but then this cycle wave 4 will just be very time lengthy and shallow. So that is called balance through alternation. Then there is 5 waves up at the intermediate degree to complete primary wave 1. We do have bearish divergence from the extreme of wave 3 to the extreme of wave 5, which indicates that it is in this 3-way move to the downside right now. Now, I previously discussed with you guys that I really don't like the proportion between waves 2 and 4, but at this point, this is kind of all we have to work with. Sometimes you don't get the most textbook Elliott wave patterns on the charts, and I think that the likeliness of this still being a wave 4 right here is significantly lower due to the fact that we don't even have that wave 4 retracement yet. So this is the main count that I'm looking at right now for Bitcoin. It is correcting for this primary wave 2, targets being from 10.6K to 17.2K. Possibly even as low as around 4,400 to around 10.2K. We will get a better idea of which target I think this could land at once that wave X is complete, because then we can compare wave Y and wave W together. So once this wave W is complete, I mean, this should take a while for wave X. It should be about 50 to around 61.8% the time of this entire move down. Sometimes it's 0.382 the time, or even equal in time. we can come up with some fib time ratios once this wave W is complete right here. So this is the targets that I'm looking for wave W, 16.9 to 21.7K. Then we get this huge retracement up for wave X. Now let's say it does not really follow this trend channel for this double zigzag to the downside on the log scale, then I would look at it on the linear scale. So this is my very bearish scenario on Bitcoin. Now, I think that the likeliness of this is pretty low. We just have to look at all possibilities here. So this would mean that Bitcoin is going to fall down to around 12.5K. Again, I really don't think that this is likely, but it is a possibility. That's why I'm showing it to you guys. Then we do get that retracement up for wave X. I think that this is a little more likely, that it only has around, what is this, 5 to around 25% down, rather than a 50% correction down to 12.5K. Now, I know that this is kind of upsetting to people, that maybe this is not a wave 4 going on to set wave 5 and it's just in this larger wave 2 to the downside, but for me this is a more exciting opportunity, because if we take a look at the SPX here, this is a new count which I recently discovered, where basically you have supercycle wave 4 complete, it is going on to set supercycle wave 5. You have 5 waves to the upside at the primary degree. This completed cycle wave 1. You have an expanded flat for cycle wave 2, which only got down to close to the 0.32 Fibonacci retracement level, but this is not out of the ordinary for the indices to have these shallow wave 2s, as over here you have this primary wave 2 doing the same style retracement to that 0.382 level. It's just not common that you get these insanely deep wave 2s in the stock market. So basically you have cycle wave 1 and 2 complete of super cycle wave 5. Right now it is just doing a 1-2-1-2 before an extended third wave. So right now it is in the primary wave 2 stage of this cycle wave 3. This is correcting as a double zigzag structure. I'm going to dive into the short-term analysis for the Nasdaq, not really for the S&P, but this is mainly what I'm looking at for the S&P right now. We do head a little bit lower for wave W before this retracement up for wave X, then down for wave Y. Now, this primary wave 2 could bottom out end of the year to early 2023, or in the worst case, this thing could extend all the way into mid to late 2023. That's what I'm looking at for this primary wave 2 for SPX. Now, the targets are going to be anywhere from around 3,500 to 2,700. Depending on kind of where this wave X retraces up to, we can kind of get a better understanding of where this Y will land, because we can compare again waves W and Y. But this is my outlook on the S&P 500. Right now I think it is just setting up for a 1-2-1-2 before we get that extended wave to the upside. Now, you might be thinking, well, this kind of sucks because everything's just going to keep on crashing in the short term. But if we take a look at Bitcoin, what is it doing? It's doing the same thing. You have a 1-2-1-2 before that extended third wave to the upside. So in my eyes, I just keep them on the bigger picture, and I realize that this is huge for the altcoin market. If Bitcoin is going on to set wave 3 of 3 once this primary wave 2 is complete, and same with the SPX, this is extremely bullish for the altcoins. And think about the opportunity that we have for these wave 2s to the downside. I mean, just taking a look at XRP, if we were to play out the bearish scenario and get all the way down to 4 to 10 cents, and then this happens on the SPX and for Bitcoin, I mean, this is just absolutely huge. So that is kind of what I'm thinking right now. That's my thought process on this whole situation. I just look at it as an opportunity. This is just a shorter time period. I mean, what do you have? You have a year to wait for an opportunity like this. In my eyes, that's pretty worth it. So I will continue to update this on my channel. This is my outlook on Bitcoin. I believe anywhere from 16.9 to 21.7K. We should get a reversal. I will continue to update the short-term analysis of this, and then we should get that three-wave move up for wave X. This will fake a lot of people out. I think a lot of people will start to think that this is just a massive recovery, but then it just sets that wave Y to the downside. Once it goes down for that wave Y, usually within primary wave 2s, it gets extremely bearish. Everyone thinks that this market's just going to keep crashing to the downside. There is no signs of a recovery except those who are looking for it, like Elliott wave traders. So that's going to be it from a macro outlook for SPX and Bitcoin. I still think that things do head a little bit lower in the short term, but then we should get that wave X retracement, which I will come up with targets for you guys in the near future. Now, I did recently update this just yesterday, going over my bearish scenario on Nasdaq, and basically the US 100 was at 11.6K. I talked about how I have targets from 9.3K to around 10.7K to the downside. Basically, we did have a pretty big gap down going as low as 11.3K, dropping about 300 points. So it is playing out the bearish scenario, which I previously discussed with you guys, this expanded flat structure, rather than this being a three-way move to the upside. So I think, again, anywhere from 9.3K to 10.7K, we should get this reversal. This would bottom out minor wave Y, intermediate wave Y, and primary wave W. Now, after that, I think that a lot of Elliott wave traders will believe, okay, that's the bottom of wave 2. This thing is going on to set that next impulse wave to the upside. Now, here's where you have a little bit of an edge in the market if you believe that there can be multiples within multiples, which not many old school Elliott wave traders believe. They believe that within waves W and within waves Y, it must be simple zigzags. I highly disagree with this rule. There is new market research which shows that markets are more complex these days, and there's not as many 1, 2, 3, 4, 5 ABC patterns. There's a lot of W, X, Ys in these corrective waves, and that is exactly what we have going on right here. Plus, if this were to be complete at this next leg to the downside, the proportion in waves 1 and 2 would not look right, basing it off of a time scale. So I think that this would just be a primary wave W, which bottoms out at 9.3K to 10.7K. We get that bullish divergence going. We get this huge multi-month correction for this wave X. Everyone thinks that this thing's just going to recover to all-time highs, and then we just get that next three-way move to the downside. Everyone loses hope that this thing's going to recover. Bang, it goes up for that wave 3. That's my outlook on the Nasdaq, S&P 500, and Bitcoin on the macro scale and on the short scale for the Nasdaq. If you guys enjoyed this style video, make sure you guys drop a thumbs up down below, subscribe, make sure you have them notifications on so you can get alerted for amazing setups just like these ones. Have a good one.